Welcome to this special bonus episode of the UK Politics Podcast, your bite-sized guide to the corridors of power. I'm Caroline Hepker.
And I'm Lizzy Burden.
3 weeks from now, we will know who has won the UK general election. And as of this week, we do also know the plans, at least the manifestos for power, the two largest parties trying to pitch themselves as pro-business.
Yes, we've had Labour promising not to raise corporation tax and setting out its AI industrial strategy. We've had the Conservatives matching the tax promise, plus pledging to spend more on defence and research. The new challenger on the right, Reform, wanting to stop the Bank of England's interest payments on its reserves, and the Liberal Democrats and Greens both promising to tax the rich, one with a banking tax, the other with a wealth tax, and use that money then to fund health and social care.
Yeah, of course, there are a lot more details than just those headlines in some actually pretty hefty manifestos. So we've gathered together some of the best and the brightest in our newsroom this morning, and of course to comb through some of those main policy priorities. So I want to welcome our City Editor Katherine Griffiths, our Senior Executive Editor for Energy and Commodities Will Kennedy, and our London Tech Editor Amy Thomson joining us in the studio. Good morning, everybody.
Hi, morning.
Good to have you. Let's start with Katherine. I wonder whether we should start thinking about finance first and foremost in terms of the party manifestos. Did you pick out some big carrots and sticks? What jumped out at you this week in terms of the manifestos and the campaigning?
Yes, so I think the manifestos haven't offered us anything particularly new generally, and I suppose if we're being brutally honest, no one's paying an enormous amount of attention to the Conservative Party's manifesto. I mean, look, in the city, people are quite worked up about what the Labour Party is going to do in a whole range of ways that they haven't mentioned yet. And I think it's sort of increasingly likely that we're going to see something on capital gains tax. But, you know, in a sort of, for the wider world, it will seem a ridiculous niche area. But this phenomenon that is carried interest, that the private equity industry makes an absolute fortune from. They pay a lower rate of tax because they pay capital gains tax at 28%, and the idea is that Labour will move that possibly to income tax, and so they might be paying 45%, and there's a huge amount of sort of will they, won't they, and there's a sense that perhaps Labour will bring that back, and then there's also a sense that no, they're going to really stick to it, because of course Labour is a spectrum of views. There are the sort of, we're intensely relaxed about people getting very rich, and then there's also the no, actually we need that money for other things.
It is quite niche, but I do want to get your view then, Katherine. The whole point of that pledge on specific, finance individuals is that it would make a lot of money for the Labour Party. They're talking about 565 million or billion?
Million, yes.
Million
yeah.
every year from doing that. Is that really possible?
Well, they've costed it, they've funded it, as they might have mentioned one or two times. Look, I suppose the issues are we don't know at all what the sort of workings behind that number are, although intriguingly the 565 million that they did put in the manifesto compares to 440 million that Rachel Reeves mentioned a few years ago when she first started talking about this. So for anyone out there looking for signs that Labour's going to roll back, that might not have been the most comforting factoid in the manifesto. But people are saying no, they won't be able to make it, not least because you'll get all these sort of private equity folks who are, many of them are not British anyway, might well up and leave and go to another country. But then also people are saying, look, when Labour gets in and they really see the sort of tax receipts, they really see all the details, they'll realise they can't really make that kind of money from it. So perhaps the cost to them and the party in that sense of wealth support might be greater than the benefit, which is raising that money. Of course, they've earmarked that money for things like helping the NHS, so it's going to look not great to start rolling it back.
But even that's a drop in the ocean compared to raising any of the three main rates of tax, which they've promised they won't. And the economic response from the Institute for Fiscal Studies has been that this is not going to be enough to move the dial when it comes to growth. In the city, is that sense of disappointment shared? Because we haven't really seen any big city bosses coming out to back the Labour Party.
Yeah, I mean, I think that, I suppose the city realises what the situation is, and that everyone kind of knows what Labour is up to, which is they are tiptoeing over the line, or attempting to, and probably when they get into power, if they do get into power, they will say, my goodness, this is a whole lot worse than we had feared, and this is going to, I'm afraid, cost everyone quite a lot of money. I mean, yes, they've definitely hemmed themselves in on those 3 big taxes that I think account for about 75% of the tax take. So it is an enormous, as Ed Balls said yesterday, straitjacketing. But I don't think the city's too worried about that. I think the city's worried about certain things. The carried interest thing is one. They are worried about a windfall tax potentially on banks at some point, maybe. They are worried about their personal taxation. There's a sort of a huge overlap of certain issues, like what they'll do on non-doms, what they'll do with sort of offshore trusts and inheritance tax, and then of course the carried interest thing. And so there will, but really, how many people are we talking about? Probably a few hundred people who will be hit by all of those things, and then and of course private schools as well. Yeah. But I think most people in the city sort of, they obviously know which way the wind is blowing, and I think what they're hoping for are things like, Labour's National Wealth Fund. Again, we don't know really very much detail about it. The kind of commitment to green investment. I think they think they'll probably have more opportunities there than they would do under the Tories in those sorts of areas. Yeah, OK, I think that's really interesting, talking about the overlap. Will Kennedy, I want to bring you in at this point. Obviously you cover energy and commodities, and there are a lot of major commodity companies that are a part of the London Stock Exchange, even if they don't operate, as much business in the UK, obviously. Is there anything that they'll be watching closely? I mean, we mentioned a windfall tax. That's, again, oil and gas, isn't it?
The Labour manifesto isn't terribly friendly to the oil and gas industry. It targets the North Sea oil industry in some ways. There'll be no new licences. That's been a long-standing commitment. They will extend the term of the windfall tax currently imposed on the oil and gas industry in the North Sea. And while that's a small part of the businesses these days of companies like BP and Shell, which dominate the FTSE 100, it does add up to this atmosphere that the oil and gas industry isn't particularly welcome in the city. And of course it comes against the background where the boss of Shell has been quite open that if he doesn't get the valuation that he wants in London, he'll go to New York. Now those things aren't directly related, but I think a Labour government isn't perhaps going to be the best mood music as that plays out.
But you could say the Conservatives have taken the opposite approach, and Bloomberg reports this morning that UK voters are greener than Sunak is betting on. Do you think that the Tories' climate change policies could actually backfire?
The politics of this is very interesting, I think, Lizzy, as our work shows. Clearly that one of the things Sunak last year, especially since the Uxbridge by-election, where they held on because of opposition to the ULEZ road charge, has been to walk back some of their green pledges, go slower on the transition to EVs, talk a little bit about how solar is in the countryside. But what you see is the places in Britain where people have spent the most on solar panels, where they've spent the most on cars, tend to be pretty Tory parts of the country. Now, that, of course, reflects principally the richest part of the country. But I don't think the politics for climate change are terribly easy for any party. I think there are many Tory voters, particularly in the richer southern parts of the country, who want to see a green transition. And then the Labour Party is itself under pressure from the Green Party to its left. So everyone's having to walk a delicate line here, but there are clear dividing lines between Labour and Tories. They both want to get to net zero 2050, but do it at a different pace. OK. Well, related to sort of technology in the future, of course, is artificial intelligence, to which Amy Thomson, London Tech editor, a lot of faith is being put in the power of artificial intelligence to help the services-based UK economy. I wonder what you make of that. We covered this week, the Labour AI strategy. They do want more regulation, tighter regulation, but they're also hoping that it will revolutionise things like the NHS and schools, and if you bring it into the public sector, and it makes things much more efficient.
Yeah, sure. I mean, there have been a lot of industry events in the UK tech sector this week, and a lot of the industry's concerns come down to whether or not AI will be overregulated, whether we'll be competing for AI talent with markets with a lighter touch regulation. And if you want AI companies to grow here and to be able to be integrated into our economy here, you need to be able to attract international talent. You need to be able to grow these businesses. We're competing with France. We're competing with America. We're competing globally. And do we have the policies in place to actually attract and retain this really high demand? So it's one thing to say, this is important. It's another thing to, put your money where your mouth is. Are you actually going to support this industry?
Yeah, I mean, I've been at London Tech Week and Founders Forum this week, and there is a quite light presence politically, it has to be said, not the big names of last year. Of course, there aren't that many votes to be won at these conferences, but it was very disappointing to some of the names on the stages, Amy. We had Sir Colin Humphreys, one of the founders of Paragraph, complaining about the lack of science and innovation policy from any of the parties, and many of them talking about, as you say, this difficulty getting visas because of Brexit and getting that talent in. Have we heard anything positive on that front from any of the parties?
Yeah, I mean, you're exactly right. Sir Colin is an institution, and he was saying, he's trying very hard. He's a Cambridge institution. He's been trying to build this revolutionary semiconductor company in Cambridge, and he's saying, I had to pay to pipe my own electricity in. I have to pay American salaries to get people over from the U.S. because there's nobody here. And I don't think, my impression was that nobody has seen anything that's going to fix these issues for them.
Yeah, absolutely. And so this also plays into the kind of London listing question as well. I mean, after the election, whoever takes over will have to also think about, well, not just the kind of place of technology and the financial sector in the UK, but actually how to boost listings on the London Stock Exchange, maybe even how to try to help with boosting valuations. How much focus is there on, everyone wants startup companies to list in London, but then the plan and the playing field for that to happen, have we learnt anything on that?
Yeah, again, I think the impression from the industry is that they're not getting a lot. Everybody was pointing to the Raspberry Pi IPO,
yes.
But in a lot of ways that's the exception that proves the rule. I mean, they're a very UK name. You don't really know Raspberry Pi outside of the UK. They come from a charity. They're not very big.
No, they're small.
They're beloved, but they're not very big. So, less than $1 billion market cap. Whereas ARM, whose chips are in Raspberry Pi computers, is something like $165 billion, and they listed in the US. And that's because the industry will tell you the investors aren't here. The excitement for tech companies and the knowledge around these companies isn't here. And there's not a lot that's been done to encourage that.
Well, I mean, Katherine, the Conservatives would argue that they've done the Edinburgh reforms. Is Labour offering much more to make London a more attractive place to list?
So I think Labour largely will do what the Tories have already set in pace on those issues. And I suppose, before the election was called, there was this sense that the current Chancellor, Jeremy Hunt, had some perhaps quite interesting things to say at the Mansion House dinner, which was to be on July the 11th, so a week after the election. It's now been postponed. So I suppose there's that sense with the Edinburgh reforms that it's a bit frustrating. Well, what's really changed? But I mean, the reality is they have done things, and there are things that are kind of due to sort of hit, like reforms to the listing rules. I suppose the big issues are, the kind of fundamental issue is there needs to be more liquidity in the London market if you want to get the valuations up of these businesses, and you want to get these businesses, startups, to list in London, and for the valuations to be of a decent level. And I suppose, well, what do you do about that? You have to either two things, I suppose, both retail investors and, of course, the sort of wall of institutional money. So you then come back to this point about, do you entice or enforce fund managers to put some money into UK assets? That's an open question that the Tories have really struggled with. And what do you do about retail investors? So there's this sense of, a British ISA. I think Labour will probably do all of those things, and I think they're more likely to go down the route of mandating a certain amount of money into assets than the Conservatives were, because it's just ideologically probably slightly more comfortable for them.
Yeah, okay, so that on the Labour Party. I wonder, Will, what your view is. I mean, again, because of the large oil and gas and mining presence within the London Stock Exchange, what your view is around the next government and what they need to do to kind of stabilise. Because it was, I mean, you and your team broke that story around Shell, the idea that that they might list in the US if they couldn't get the valuation that they wanted in the UK. That was an absolute kind of bombshell moment for the UK to realise that such a big firm might think about that. What's your view around the listings issue in the LSE?
I think it's going to be a very difficult issue for the Labour government if they win in July. If you read the manifesto, unsurprisingly, they're all in on the energy transition, the need to move away from oil and gas. This is not the atmosphere where we're going to bring huge amounts of more money into investing in oil and gas. And it just speaks to the problem that the industry has, is that European investors do not like this business and American investors do.
What about this GB Energy? That's the other big kind of Labour plan.
So there is a lot for people who are invested in utilities, in renewable energy, in the grid. Labour's plans there remain ambitious. There's been a lot of focus on the fact they scaled them down from this $28 billion a year that they had to something a lot less than that. But it's still, when you read the manifesto, very ambitious. This is a new state utility which will be capitalised with £8 billion of public money, and is going to invest in new projects, and it's all aimed towards an enormous upscaling of renewable energy over the next 6 years. So we'll see quadruple the amount of offshore wind, triple the amount of solar power, and the idea is to have carbon-free electricity within the end of the decade. It's an incredibly ambitious programme which will funnel a lot of money that way.
Katherine?
I just wonder, Will, what you think about the notion of how much does sort of if Labour does win and it kind of really does set out, kind of a full throttled government-backed commitment to the energy transition, what does that do to sort of sentiment among investors and therefore the valuation of Shell? I just wonder if there could be a sort of virtuous circle on that, which actually will play into whether or not, Shell's value goes up and makes it more keen to stay in the UK and an easier decision for it.
I think that's possible. Obviously, Shell is in some of those businesses, and Shell has a big presence in the UK, especially at the retail end. But Shell has also moved away from building utility business and getting as big in power as the last CEO wanted to do. And I think the new CEO, Wael Sawan, is less invested emotionally in the UK. That's the impression you get talking to him. And he's less invested in businesses which can grow quickly in the UK, with the possible exception of charging electric vehicles. So it's possible. I mean, clearly the whole manifesto is aimed at growth and aimed at getting the UK economy kick-started. So there may be something there. But I do think that when you talk to Ed Miliband, when you read his part of the manifesto, the future of Shell is not top of his priorities.
All right, it's really a privilege to have you all in the studio with us. I feel like a fly on the wall to some of the discussions that have been happening in the newsroom around these various manifestos. Thank you so much for being with us. Our City Editor, Katherine Griffiths, our Senior Executive Editor for Energy and Commodities, Will Kennedy, and our London Tech Editor, Amy Thomson.
That's it from us for today. If you like the programme, don't forget to subscribe and give it 5 stars so that other people can find it on Apple Podcasts, Spotify, or wherever you listen.
This episode was produced by Tiwa Adebayo, and our audio engineer was Sean Guastamakia. I'm Lizzy Burden.
And I'm Caroline Hepker. We'll be back with more on Monday. This is Bloomberg.